Let's be brutally honest. Most of us believe we're decent with money until reality hits. You work hard, you earn, but somehow at the end of the month, you're left staring at your bank account thinking, where did it all go? Here's the uncomfortable truth. It's not about how much you make. It's about the small, seemingly harmless habits that slowly bleed your finances dry. And today, we're exposing every single one of them. 1. Impulse spending, the silent budget killer. That little voice in your head says, it's just $5. Then another says, you've worked hard, treat yourself. A coffee here, a snack there, an unplanned online purchase because it was on sale. These tiny transactions add up like drops in a bucket until the bucket overflows. Think about it. 10 per day on random purchases equals 300 per month. 300 per month equals 3,600 per year. That's a vacation, or a debt paid off, or an investment that could grow. The question isn't, can I afford this, but is this moving me forward or just feeding a momentary urge? 2. No budget equals no control. If you don't tell your money where to go, it will disappear. A budget isn't about restriction, it's about awareness. Most people avoid budgeting because they're afraid to see where their money is really going. But ignorance isn't bliss, it's bankruptcy in slow motion. How to fix it? Track every expense for 30 days. Yes, even the $1.99 app purchase. Categorize. Fixed bills, savings, guilt-free spending. Adjust. If you spend $200 a month on takeout, own it. Then decide if that's worth it. 3. The minimum payment, trap credit cards, buy now, pay later schemes, small personal loans, they all whisper the same lie. You can handle this later. But debt doesn't stay small. Interest compounds, and suddenly, you're not just paying for what you bought. You're paying extra for the privilege of being in debt. The hard truth? A 1,000 credit card balance at $18,800 per year, just in interest. Paying only the minimum? You'll take years to clear it. Solution? Attack small debts like they're emergencies. Because they are. 4. Saving what's left over. Spoiler, there's never any left. If you wait until the end of the month to save, you'll never save. Why? Because life always finds a way to spend your money. Flip the script. Pay yourself first. Before bills, before spending, set aside 10 to 20% of your income. Automate it, out of sight, out of mind. This isn't just saving, it's paying your future self before anyone else gets a cut. 5. Lifestyle inflation. The more you earn, the more you spend. Got a raise? Upgraded your apartment. Bonus, new car. More income should mean more wealth, but for most people, it just means more expenses. The cycle. Earned 50K, SPEND 50K, spend 50K. Earned 80K, SPEND 80K, spend 80K. Earn 100K, still living paycheck to paycheck. Break it. Every raise, increase your savings rate first. Ask, do I need this or do I just want it because I can afford it now? 6. Keeping all your money in a savings account. Yes, saving is good, but money sitting in a low-interest account is actually losing value due to inflation. Example, inflation equals approximately 3% per year. Savings account interest equals approximately 0.5%. Net loss equals 2.5% per year. Solution? Learn to invest, even if it's just $100 per month in an index fund. Let your money work for you. 7. Not negotiating. Leaving money on the table. Most people hate negotiating, but here's what you're missing. Bills. Phone, cable, insurance. Companies often have hidden discounts. Salaries. Not negotiating your first offer can cost you hundreds of thousands over a career. Script to start. I've been a loyal customer. Are there any current promotions or discounts available? You'd be shocked how often this works. 8. Emotional spending. Retail therapy. Isn't therapy bad day, shopping, bored, online browsing, celebrating? Expensive dinner. If your spending is tied to emotions, you're not controlling your money. Your feelings are. Fix. Pause before buying. Ask, am I buying this because I need it or because I feel rust-one? Replace spending with free stress relief. Walk, work out, call a friend. 9. No clear financial goals. I'll save cake someday. I'll invest eventually. Without a target, you'll wander forever. Write down short-term, 1 year, emergency fund, debt payoff, long-term, 5 to 10 years, house, retirement. A dream with a plan is a goal. Without one, it's just a wish. 10. Procrastination. I'll start next month. The biggest wealth killer isn't spending, it's delay. I'll budget later. I'll invest when I have more money. I'll deal with debt, eventually. But time is the one resource you can't get back. Every day you wait, compound interest works against you, debt, or misses working for you, investing. The bottom line: your financial future isn't determined by luck, your job, or the economy. It's decided by your daily habits. The good news? You can change them today. Action steps right now. Open your bank app. Review the last month's spending. Cancel one unused subscription. Move $50 or whatever you can into savings immediately. Small steps today equals massive results tomorrow. The only question is, will you start now or keep making excuses?